Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, January 7th, 2010. Well, we have a mixed bag on Wall Street today with the Dow and S&P higher across the board. The Dow is up 15 points, the S&P 500 up 2 points, while the Nasdaq again is lagging down 7 points on the day. So really an interesting kind of couple days this week after the nice move on Monday as new money has flown in. You kind of see the market stalling out here. It's not really going higher, it's not really going lower. It's trying to figure out where it's going to go, and you know what that means, folks. It means you're waiting on the unemployment report, the jobs number, the non-farm payrolls tomorrow morning at 8:30 a.m. Eastern time to really dictate where this market is going. And that's really what I think personally is going on with this market. I talked to the Research Center premium subscribers last night a little bit and said to them that I believe that the market would generally stay kind of neutral-ish today based on that jobs number. That's exactly what you're seeing. You're seeing, again, technology being a little on the weak side, but the S&P and the Dow are just fractionally positive today. Now, we're looking across the board here, and I'm going to go over a bunch of stocks. I want to cover the SPY right here as well. I want to talk a little bit about some key plays that we've called out today in the chat room as well to give you guys an idea of what the intraday activity has been like. It's been a decent day with the intraday activity, no doubt about it. Some small caps continue to run. It's really been a fantastic day trading market and swing trading market on small caps of late. That'll switch. It's going to go back to being a fantastic swing trading market on larger caps and such, but right now it seems like the small caps are where the big money is flowing right now. We can talk about a couple of those plays in a little while. Now, again, as I mentioned, Dow, S&P up, NASDAQ down. Now, interesting to note, yesterday we talked a little bit about the NASDAQ, and I'm going to put up the Qs chart because the Qs got smoked yesterday. The market was overall flat, but the NASDAQ did take a hit yesterday, and stocks like Google were down $15 to $16 yesterday. You also saw Apple Computer down about $3.50 yesterday as well. And what I want to point out here is look at this chart pattern on the Qs, which again mirror the NASDAQ. Look at that drop. Look at that kind of continual move to the downside. That's very important to note here, guys, in my opinion, to see that the technology stocks have really lost steam, and that's got to be telling us something, especially when you see major stocks like Google. Let's punch up Google's chart here. Google, look at this, down another $10 today. Now, Google yesterday was down about $15 to $16. Today, down another $10.50. This is actually quite a dramatic fall on Google. I mean, just take a look. Yesterday's gap up, we started on a small gap up yesterday at $626 right here. All right, now you look at where we are. We're at $597. So you're talking about almost a $30 drop on Google just in a day and a half of trading. And that has to be monitored, folks. That is a big deal because remember, Google is considered one of the technology leaders out there. In addition, Apple Computer really not down a lot today, but look at that drop from yesterday as well. And again, these are signals we have to be watching for. You want to know when big money starts to rotate out of key sectors. And right now it looks like it's rotating out of technology and somewhat going into commodity issues. We've seen a lot of action on the USO of late, although the USO, in my opinion, is starting to top out here in the near term, but also you've seen a nice move in financials. Financials I had talked about a week and a half ago as having a big move on the horizon, and sure enough, that's been exactly what they've done. Now, I talked to you guys about this over the last weeks. I actually gave this call out 2 weekends ago in the free weekend video for those of you that follow that. This call actually went out, and it was for a long bias on all financials based on bullish flag patterns right here, and this was the bias going into that last week of December and then into the first week of January. And look at the move and look at the outperformance on the GS Goldman Sachs here. I mean, you could take a look at JP Morgan, same thing. Look at these bull flags play out in a beautiful... And again, all this is, folks, is just knowing price pattern and time, putting the pieces of the puzzle together. This is exactly what we teach you in the Research Center to do, and then utilize that to make the right decision on going long or short of play and finding the ones that are going to outperform. And sure enough, look at that move on JP Morgan. Look at Wells Fargo, same thing. I mean, this is just fantastic. Look at this beauty of this bull flag pattern on Wells Fargo, and look at the outperformance from that call. So again, just pointing out, this is all a learning experience. You want to continue to learn, pick up new things, to let yourself find the profitable plays that are going to make you the maximum amount on your swing trades, on your long-term investments, on your day trades, whatever your purpose is. Now, let's go back to the spiders and talk a little bit about what we're seeing today. There's your daily chart. We're going to rotate to the intraday. The daily analysis is really kept to the minimum in these videos as we focus on the premium subscribers getting that type of move, where the market's going to go tomorrow, the next day, next week, next month type deal, really where to position themselves. But what you can see here is early on in the spiders, we actually had a really nice sell-off. You had a nice little sell-off here on the spiders coming all the way down. The Dow was down as much as 65 points, and then from that pivot point, we came all the way down to this 113.20-ish area, and then you can see a reversal. Now, we had a key trend line at 113.35 right here in pink, plus this trend line right here in yellow sloping up, you can see you pierced that, you never confirmed it. So for those of us that know confirmation, the key in the money stocks confirmation signal, for those of you that are premium members that are watching this video as well, you know that you look for confirmation right here on a close below this low. You didn't get it with a green candle reversal. Then you had a pause candle. That's a bullish signal. We pointed that out in the chat room. And sure enough, look at the move you got off of that all the way up. You curved all the way up to this yellow line. And since then, you've really followed this yellow line. This trend line actually extends all the way back multi-days down to lows going back to the first trading day of the month. Of the new year, actually, from the low here. If you connect that through the lows, that line goes all the way up here. And again, I have to bring my charts back into focus. But in any case, you tagged that, pulled back. Tagged it, pulled back. Now you're coming up to that area again. You're right into this green trend line, which is the high from yesterday. And you're looking to tag that and pull back again, or possibly go to the yellow line and pull back. All right, so some key levels there for sure, folks. I had talked to the traders in the chat room not only about this bullish consolidation candle here for a move up, but also a short right here we had called out based on that trend line. Look at how beautifully that worked out to the downside as well. All right, right up to the upside, then pulled back again. It seems like we're just hovering on this slanted trend line in almost a little bit of a channel. You could make a case that you have a little bit of a channel forming now on the upside as well. So we'll keep an eye on that in the intraday chat on the afternoon cycle, as I'll take over in a little while as well on that chat room. Now, a couple other things to go over. Let's touch on the Amazon chart. Always fun to look at some of these large caps. And Amazon, again, getting rocked here, folks. Again, very key, and I can go back to a key call also that worked out beautifully for those of you that were interested in this one, and I know a bunch of you guys took it. But this was our key call as well on the Amazon chart. We had talked about the breakdown right here and then the retest, and that was your shorting opportunity. I actually had added that to the Pro Trader watch list on the bearish side, and sure enough, look at that fall off of that. And again, this is a key play that I've really taught and striven to teach all the premium subscribers, whether you're in the chat room or in the research center, to go over and understand that you don't buy breakouts or breakdowns. Breakouts and breakdowns are the wrong thing to do. All right, that's how big money gets you off guard and takes your money. The key is to wait for the retrace. So here's your breakdown. You don't want to buy here or here, because look, it reverses so quickly, you'd be out of the money or stopped out very quickly. What you do is you wait for the retest of that trend line, and that's where you short. So there you go, and look at the fall on that. Really, from that point on, that was at 140 on Amazon. You're now at 129. So that's how you analyze stocks. And again, that's what we strive to teach in the Research Center, in the nightly videos. You name it, you sign up for that Research Center, you're going to get your Hidden Gems play. By the way, Hidden Gems play coming out in about 1 week, so you want to start getting ready for that. The new bonus Hidden Gem play. The last one ran 45% in 2 days, and continue to watch that one, as it should be a fantastic play. But nonetheless, you want to continue to watch for the new Hidden Gems bonus play for 2010. We all wanted to get 2010 off to a hugely profitable start. We've already done that in a major way between the calls and the other posts. Obviously, a couple of the other ones, ENER just continues to rocket here. Look at this. I put out a positive bias issue right here, and look at the move on ENER since then. This is the daily chart, really going from $10.80 where we posted the positive bias now to a high of $12.68, almost $2 or 20% advance on that stock. And I think it still has more upside to go over the next few days, possibly up to around 13 to 13 and a quarter, really my target on that, my initial target. Then ultimately maybe down the line $15. But right now, again, a very nice move on that ENER, just an unbelievable mover. Let's take a look at Goldman Sachs. Now, the financials, again, continue to have some good moves. Let's take a look at the intraday. Believe it or not, Goldman Sachs is having a little bit of a bullish consolidation pattern right here. See this up move, then sideways trading? That's what we call bullish in spirit of consolidation. You have to understand what that means. That means that there's a tendency for that pattern, as long as it stays above the 20 moving average, to break to the upside at some point, possibly when the 20 comes up right to this point here. Then it oftentimes will break up. If it gets below the 20, then it would be a failed pattern, and oftentimes you'll see a big reversal on that to the downside. So keep an eye on that. In addition, we talked about Google. Google, very, very weak today. Apple is down 70 cents. Not that weak today, but was weak yesterday. Research in Motion down 30 cents. Amazon down. Couple other key calls here. Microsoft continues to be below that 3150 level that we had called on that's actually on a monthly chart. If you take a look at your monthly chart and you draw the high from 2000 all the way through the high of 2007, it came and gave us a notification and an alert that I posted to the Hot Charts and Alerts, which is part of the Research Center, that at 31.50, that would be your shorting opportunity, and that would be a multi-month swing trade. Sure enough, guys, 31.50, it's now trading at 30.40. So it's already $1.10 in the money on that short call on Microsoft. And again, all I'm doing is trusting the charts. I read the charts, they speak to me. I learn the language of the charts. That's what we strive to teach our subscribers to do. And again, we hope that you join us here in the new year so you can start making the money that all our other subscribers are making. Have a wonderful evening, folks, afternoon. We'll talk to you soon, or we'll see you in the Research Center or the chat room. Take care.